Hey FreshBooks users, this video is all about a year-end checklist I created to help you simplify things you need to do at year-end. To follow along, you need to go to heritagebusinessservices.com/year-end-checklist and download the checklist and follow along with it while you're watching this video. You need to do that because you're going to find clickable links in that document. So when I get to a section, there might be some supporting material like a video of mine or another resource that you can click on for further explanation. The production value on this video is going to be a little low because it was just a Zoom recording of my weekly office hours group. I went ahead and asked them if I could just teach through this checklist for a few short minutes, and I recorded that portion of our meeting. So go ahead, hit pause. You go download the checklist. You should also hit subscribe to this channel and get ready to follow along and be ready for year end. All right, let's dive in. Hey everyone, this is a quick teaching session during the January 9th FreshBooks weekly office hours. I'm going to be walking through this year-end checklist that I'm screen sharing right now. This is available for download on my website. This video is going to accompany the checklist. I want them to kind of be in tandem because I'm going to explain more than has been written. This is going to be mostly geared toward cash basis tax filers living in the United States. A lot of it applies to other folks, but that's my caveat. First step, so we're going to just move down this checklist, y'all. Reconcile your bank and credit card accounts. You cannot consider your books done for the year until this is done. I 100% believe your books are wrong if your bank account is not reconciled. Now, I have a deep dive into bank reconciliation in FreshBooks. There are 6 steps, and there is one step that is so important, and it is this. You have to check to see if you've been doing it correctly by running your trial balance report for all dates through December 31st. Do not pick the date that says last year, y'all. Pick custom and then pick a date way far in the past prior to your very first transaction that you've recorded in FreshBooks through December 31st of the year you're trying to go through. And that is how you're going to take your checking account bank statement for December 31st. And if your trial balance says that your checking account matches what your bank account balance has, then you're okay. If not, you're going to have to go back and check all your statements and change that ending date to match all your statement dates and see where you got wrong. At some point, you've gotten off. And the only way to check it is to go month by month, comparing your ending balance to what FreshBooks trial balance says that you have. Credit cards are the same way. The only issue is likely you're not going to be able to look at December 31st for your credit card because most of you are going to have a random date as your statement date. So December 19th. If you run your report, your statement for December 19th and you change your end date and your trial balance to December 19th and they match, that's probably good enough for me. You don't have to wait until the January 19th statement comes out, although you can. That is how you know you're reconciled. As a part of that reconciliation process, we're going to be moving on to this checkbox number 2. Petty cash has to be 0, y'all. And this is absolutely crucial for accurate books in FreshBooks. The petty cash concept is unique to FreshBooks. No other accounting software operates this way, but you're going to run your trial balance report again for all dates through December 31st, and petty cash had better say 0. If it doesn't, you have some problems. I have an accompanying video that I think I dive deeper into it at minute 8:45 about petty cash, how stuff gets there. Everything goes to petty cash first, and you sort it to the right spots, whether it's a bank account, credit card account, or your owner's equity. Those are usually the places where it goes. So call me if you need help with petty cash, but that's a critical step. Next, I'm going to talk about generating reports for your tax preparer. So first, let's talk about what everyone needs to do. You're going to get your annual profit and loss report for your tax preparer. That's going to be required, no matter what your structure is. You can download that in PDF or Excel. So when you're in your P&L, there's export functions. FreshBooks is a little squirrely. You get 2 options. You either get every single month plus a total year-end column, or you get 4 quarters plus a total column. If you only want a year total, you cannot get that in PDF form. You're going to have to export your P&L to Excel and then delete all those columns in between your far right column, which is your yearly totals. The other thing probably everyone should do is your general ledger report. I do think your tax pro is going to ask for that. Your general ledger is just like a list of your transactions. I think you should export it in PDF and Excel and give the tax preparer the opportunity to fiddle with it however they want to. Lots of tax pros love their Excel. Now, if you're an S Corp or partnership, balance sheets are going to be important for you. Unfortunately, when you look at that balance sheet in like the visual that FreshBooks gives you, it has one line for cash, which is if you have multiple checking accounts, it's not going to be helpful. You only get one account. But when you export it to Excel, for some reason, everything that was like summed together to get those balance sheet account totals is expanded. So export your balance sheet to Excel. You don't even give the PDF version to your tax pro because they'll be confused. Moving down, you're related to reports for the tax preparer is do not give them your trial balance. A lot of tax pros are going to ask for that. And there is no actual trial balance report in 2024. I know I've been saying that word, but it is not what we learn in accounting school that a trial balance is. So even though FreshBooks has a report that calls that, if your tax pro asks for it, just say that FreshBooks does not have one. I'll try to briefly explain why. The balance sheet accounts must be run on the trial balance must be run from the beginning of time, from your very first FreshBooks transaction till the day that you need it. It's like a running sum of and subtraction of all the ins and all the outs. But your P&L accounts, your expenses and revenue accounts, those do show up. Like if you ran your trial balance for last year, it'll just show what happened, and there's no concept of beginning balances in FreshBooks. So that's why it breaks. Either your trial balance expenses and revenue is correct and your balance sheet accounts are wrong, or your trial balance sheet accounts are correct and your income accounts are wrong. So you can't give one report. There's no one report that works, or no one time frame that works. Note number 2, don't give FreshBooks access to your tax preparer because they're not going to know how to use it, but they will assume that they do. For instance, Exhibit A, the trial balance report, they won't know that it's not right. And if they're working fast, they're just going to download it and not really understand the quirks of it. That's just one example. They don't know that you can't change journal entries. They don't know how refunds work in FreshBooks, all sorts of squirrely things. So only give your tax pro access if they have attained what's called the Certified FreshBooks Accounting Partner Certification. That would be like, that's my minimum level of when a tax pro should be in there. Otherwise, you can give them what they need, but you don't need to give them access. All right, moving on. Next checkbox. Identify your estimated tax payments. So a lot of y'all are going to be those Schedule C filers who have to make those quarterly estimated tax payments. And your tax pro is going to ask for that. So I'm just giving you the tip to identify those. Some of you make your tax payments from your business account because you think of it as, oh, these are the taxes I'm paying because I'm in business, even though those are owner's draws anytime you pay directly to the IRS from your business bank account. So when you've paid the IRS, let's say you paid them, $5,000 in the summertime for your June payment, we marked that as an owner's draw, but hopefully you made a little note saying this was for my estimated taxes. And so when you run the general ledger report, y'all, and you go to your owner's draws, if you made those notes, they'll show up there and you can say, here are the 4 payments I made for the past calendar year. The next step, that's a good year-end step for everybody. You have to complete your final steps for your payroll provider so they can get W-2s out by January 31st. To be compliant, if you have employees, January 31 is your deadline. That is the same if you're just an S Corp and you don't even have employees, but you're on payroll, which you have to be if you're an S Corp. You're going to be treated like an employee in that employee software. So read the emails that the software is sending you and do whatever it says. Every software is different, but the tasks are like the same. So just make sure that they have it so that way they can issue those W-2s for you and or your employees at the same time. I said you're going to want to cry if you don't follow their checklist and and then you realize too late that something was wrong and it's going to be a correction situation, and you want to avoid that. If you have been doing payroll manually, then you're going to want to work with your tax preparer to reclassify those draws you made, those owners' distributions, and get them as wages and employer taxes on your, as a, a deduction on your P&L, but also promise me that you're going to stop operating this way and let someone help you get modern payroll set up. Don't operate that way if you're an S Corp, y'all, and you just are taking your draws. Get set up on payroll. It's the right way to do it. And it makes year end easy. Whatever savings you think you're going to get by just like, oh, I'm just going to take draws and the tax pro will fix it in the end. Just do it the right way. Take that paycheck and let something like Gusto, who I use, or any other modern payroll provider, like an online payroll provider, it's called full service payroll providers, submit your regular employer and employee contributions to the different tax authorities throughout the year. Okay, another January 31st deadline. We're moving on here. 1099s. 1099s are what you're going to send the people you've hired to provide services to you for your business. The question is, who needs one? And the first pass at figuring that out is seeing who you've paid more than $600. And I have a video called the Expenses by Merchant Report. You run your expense report, sort it by merchant, and then you're going to look and see which of these merchants, because I've been tagging all my merchants well when I'm doing my expense categorization every week or month or whatever, however frequently you're doing your bookkeeping, you're going to see, oh, I paid so-and-so web designer, $2,000 this year. Then you're like, well, that's a candidate for a 1099. So what do? You have to find out, well, yes, I paid this person over the threshold. I need to ask them, do they get a 1099? And to do that, you request their W-9. I use a software, y'all, called Track 1099. This is kind of a commodity software. There are others that do it. But basically, if I have someone that I think I needed to send a 1099 to, I go to Track 1099, I put in the person's contact info, and that sends them an email saying, please fill out the W-9. Once they fill out the W-9, we're able to tell, were you a sole prop or a single member LLC without an S Corp election? That means you're going to get a 1099. And then, when they've checked that box that shows they're one of the people that should get one, then the next step, the workflow in Track 1099, is to put in how much the 1099 should be for. And so in our example, maybe it was $2,000. We're going to put that in the 1099 NEC, and then we can hit send to the person. And it's a couple bucks, and they handle it all for you, and you are in compliant. They submit the forms to the IRS saying, here are the 1099s that, Kate Heritage Business Services filed, and then it sends to all the people I sent 1099s to, it sends their individual one. So there's two ways to report. You have to send it to the people that get the 1099, and then you send a summary report to the IRS saying, I sent all these people 1099s. And I recommend Track 1099, but that has to be done in January, and use your expenses by merchant report to get your totals. Oh, run your accounts receiving aging report. Yeah, so this is just another thing to check at year end. Have your customers been paying you? There's a accounts aging report in FreshBooks, and it's pretty good. And so when you run that report, go look and see who hasn't paid you. Use this as the time of year, part of your year-end checklist. Hey, so-and-so, you owe me $5,000. Why haven't you paid? It's a good time of year to just make sure you're following up and collecting and keeping your AR low. Moving on, identify mileage and home office deductions. I have a video here about the right way to claim mileage and home office expenses. Any structure can use an accountable plan to be reimbursed. And by the way, all of y'all members of my office hours group, I give you a free accountable plan template if you need it. But let's say once every month or maybe once a quarter, you're going to go through your mileage, and you can apply the IRS mileage rate. And that changes every year, so always look it up. But anyway, and then let's say you wanted to claim your electric bill and your home internet. You would apply that percentage that you and your tax pro had decided was, reasonable. And then you could say, okay, according to my accountable plan template, I get to pay myself $68.12 for this month's reimbursable expenses, or this quarter's reimbursable expenses. And then you can send the cash, y'all, and attach the accountable plan spreadsheet as like your documentation, as your receipt for those transactions. If you didn't do that, and lots of people don't, your accountant's going to ask though, what were your mileage? What were your home office expenses? So even if you watch that home office video, you'll get the answers of like kind of how to think about working with your accountant to get those claimed. And those are going to be claimed outside of FreshBooks on your tax return, but not necessarily in the books because there weren't cash transactions backing them up. But you can get them in as cash transactions if you pay yourself as reimbursements. If you track mileage in the app, y'all, there is the FreshBooks mileage report. Then I have a video on how to use mileage. Kind of again, if you're a road warrior, I don't recommend the FreshBooks mileage app as your main solution. I think there are better solutions for the road warriors out there. But if you're the 10 times a year driver, it would be a good place to host, to have that information have a home. Okay, we came to, whew, you made it. So now I'm going to stop this video because the questions aren't going to be public. I'm going to stop recording, maybe. Oh, stop recording. That's right. Whew, you made it. We made it. If you need more help, please don't be shy. You can reach out to me at heritagebusinessservices.com to learn more about the services I offer, including the group that I have for folks who DIY their bookkeeping on FreshBooks. Perhaps you'd like to be a member. If this resource was helpful, please share the URL with your networks. I'm Kate Josephine Johnson, and I help businesses build their business legacy.